Hey everyone, it is time again for a 5-minute market update here at Parallel Portfolios. So we're going to take a few minutes, talk about the markets, talk about where we're at, some views that we have. So before I turn it over to you, Greg, I got to ask, please tell me you're going to be addressing the tariffs and trade wars and all this fun stuff that we've been reading about lately.
Yeah, that does seem to be the topic of the day, doesn't it? There's no doubt we'll touch on that throughout, but really focus on it. We'll leave everybody hanging to the end.
All right. Okay, good.
All right, so let's start off though looking at the S&P 500, the broader U.S. market that we like to start with, because we always like to just check in to see how price trends have been. Still nicely above the 200-day moving average, that red line. Still well within the price uptrend. Had a little bit of pullback here in the last week, but that's after we've had a nice little gain. And really, as we combine this, the fundamental picture keeps looking good. Economic numbers are strong. We might even see a 4% GDP this quarter. Corporate earnings are strong. But as we kind of drill down into the S&P, we found it interesting that the 5 largest holdings within the S&P, 4 of them are technology names. The 5th is Amazon, which most people would call technology. Those 5 names make up 15% of the S&P. So 5 out of 500 make up 15%. And of course, those names, as most people are aware, have done phenomenal. So yes, there is somewhat of a broad advance moving the market, but a lot of it is these big tech names that are moving the market up here. But for the most part, we'll take it. Things are looking solid in the broader U.S. markets.
So this is the S&P. What are some other areas of the market that are looking good to you?
Yeah, in addition to those tech names that we mentioned, actually small caps. I know we referenced small caps last month on this video, and they've continued since then to move higher. You can see small caps are already at an all-time new high. There's a lot of things moving these. At the bottom of the chart, we actually have a relative strength line. So this is the small caps compared to the S&P, and as it moves higher, it shows they're outperforming. Last year they really didn't do that great, so maybe they're making up for last year. Also, the tariffs we referenced. Sometimes people think maybe they're a little, less susceptible to that. They're benefiting from the corporate tax cuts more than large. A lot of different reasons you can throw in, but the bottom line is small caps have been propelling higher here in recent months.
Oh. Well, I know one area that's not been doing so good here lately, and of course that would be emerging markets. If you look here over last year, we had a wonderful uptrend in 2017. Again, comparing it to the S&P 500 and rising line in both of these instances, emerging markets did very well, and even really into April of this year, and then started underperforming the S&P and moving down here. And as a firm, we had an overweight as an allocation, in our asset allocation, we had overweight to emerging markets. But this recent weakness and downturn here has definitely caused us to reduce that weighting there. And the culprit, the main reason for that is, of course, the U.S. dollar. So as you notice, all last year, the U.S. dollar was in a decline, right? Emerging markets did well. There's a lot of reasons for this we can get into, but at the end of the day, emerging markets and the U.S. dollar tend to have an inverse relationship. So with this recent strong move in the U.S. dollar, emerging markets has not done as well. We will probably need to see some weakness in the dollar before we look to increase our weighting in emerging markets. So we've talked about the markets, the good and the bad. How about some tariff and trade policy? What do you think?
Yeah, certainly we're hearing a lot about the trade talk and the tariffs and all that. We've actually referenced it as one of our concerns on our monthly viewpoint going all the way back to January of last year. We thought this graphic kind of told a little bit of the story, and we'll expand on it. Right now, of course, it's always a moving target, but as we stand today, the tariffs have a potential impact, negative hit of around $120 billion here in the U.S. If we compare that to some of the policy that was enacted in the, around the end of last year, as far as the tax cuts, extra spending, repatriated profits, that far outweighs the estimated impact of the tariffs. So from that perspective, it's fairly small. You hear us talk all the time about noise, avoid the noise in the media. But there are some other things here that are definitely worth keeping an eye on and do concern us. Sometimes the tariffs kind of give cover, so to speak, for other companies, U.S. companies, to raise their prices. So it's more expensive for consumers, higher inflation. And then also, just will CEOs be less apt to spend if they hear these talks about tariffs. So,
Right.
This ultimately months ahead, we may look back and see this as just another noisy story that the market had to get through. But we do realize there are some legitimate concerns to keep monitoring here, and it does affect a lot of areas of the market. And so it is something certainly on our radar, but by and large, we think the positives outweigh the negatives.
All right, sounds good. So in summary, stocks are still within a long-term positive trend. You mentioned some concern there about the top 5 in the S&P being, making up a large part of the weighting that index, but things are still positive there. Small cap and big technology, of course, leading. That's the good, the bad. Emerging markets are weakening. We talked a little bit about the dollar. And even though the trade wars are notable at this point, like you said, it is still manageable. So as always, if you have a question, comment, anything like that, give us a ring, give us an email. We'd be happy to discuss with you and answer any questions you have. Thanks so much, and have a great day.